So let's look at why the DOM is perfect for order flow. In and out quickly in a few seconds or less. Yeah, one of the things we introduced was one-click trading, right? That's perfect. Ticks that box. I can get in and out quickly. It's in the now. It's based on what's happening now. That's a beautiful thing, and I'm going to go into this in more depth in the next webinar. But one of the great benefits of the DOM is it's only showing you what's happening right now. And if you can trade in the now, it's massively powerful, and most traders can't. And the vast majority of trading styles out there are not trading the now realistically, even though they say, oh, I've got a setup now, right? And it's broken this level or this line. That level or that line is often based on a lot of information from the past. It's actually not based on now, and it's often not based on liquidity of what's happening now. Okay, so the DOM doesn't show you the history. And for example, with the Norden method, I really, tell my students, I do not want them having a price chart on there. I don't want you thinking about what's happened in the past. I just want you to focus on the now, liquidity and order book and price action, the now. So the DOM is just that. That's a massive reason why it's so powerful. Again, I'll go into that in more depth in the next webinar. The DOM just shows us current order flow, current liquidity. It's fantastic. It shows us this is what we wanted. This is why we have it. With the DOM, we can potentially trade at any price level, particularly as it is now. I went through the history of the DOM last time, and I explained to you that that wasn't possible with the very first trading platforms. Even the very best one, back in 2000, 99, 2000, even the very best one didn't have all the price levels that we have now. We just had like the 5 or 10 top prices. They could have been anything. So that was changed. It was amended. It was amended at the request of the locals and order flow traders. So now we can trade anywhere, any price we want to. Does it allow us to pick off weak traders? It does, if you're skilled and you understand how and what they look like and why they do it and those sorts of things. So it enables us to do that. And again, enables us to trade in a non-predictive style. You can't see trends on a DOM, right? Which is great. You're not trying to think, oh, I think we're going up or down. It's just, if you look at a DOM on a fast market this morning, it's just up and down, hazy, crazy, helter-skelter. You're very hard to pull much out. Some people struggle with that, and because they love seeing, trends and things easy. But actually, if you can understand that randomness and you appreciate that there is randomness, which is another key aspect of trading the DOM, which a lot of traders out there struggle with that concept of randomness, right? They think there's a pattern behind everything. And, if you believe that, you will always struggle, okay? You're always going to tend towards technical analysis. You'll always struggle. I saw something on my Twitter feed today, albeit on the For You part of Twitter, which is generally a cesspit, but this is someone who's actually well respected in the field that they work in, which is technical analysis, saying that the last 4 closing prices of the NASDAQ all ended in 8. And then of course you get all the comments about, yeah, that it can't be a coincidence. Yes, it can. That is still randomness. If you don't understand that we could have 4 days in a row where the NASDAQ or any index ends in the same number, that's just as random as it finishing, in an 8, a 7, a 3, and a 2. All right. This is, and again, read Fooled by Randomness. Whatever you think of Taleb, that is a brilliant book, and it explains a lot about this markets. But things like that, if you tend towards patterns, if you're always looking and trying to group something in a pattern or a trend or something, you're going to struggle over time at many times in these markets. So the DOM is just showing you this randomness, and you have to accept there is randomness. Why is there randomness? Because of market orders. Right, there's going to be a ton of market orders on the open this morning, right? And in that first hour or two, there's going to be a ton of them, particularly if you're trading NQ. Understand that. It will create price levels, it will create all sorts of things, but a lot of that's going to be created by randomness. Pure order flow trading, and certainly with like the Norden method, we embrace that randomness and accept it, embrace it, and just move on with it. So not predictive style. So the DOM is the perfect product, the perfect platform style to use it, and plus with time and sales. Okay, so obviously we want, it's the other essential tool. What is trading? You won't get to see every price on the DOM. Sometimes you won't. You want to see what volumes are, and so time and sales as well. It can help you judge the pace of the market as well. It's something we watch. Again, I've said to a lot of people before that order flow traders, my style or other order flow traders, as much as anything, we judge liquidity. That's one of the key aspects. If you struggle to judge liquidity, pace of market, you're going to struggle to trade order flow. It's a really key thing. So time and sales plus DOM, these tools are essential, and if they are good, then this is what we use to trade order flow.